What's going on, everybody? It's July 31st, 2024, day log episode over NQ in the live stream view. So today was a bit of a wild one. We had FOMC with the Fed rate release, and then we had an AM session news event driver that came out before the open. So there was a lot in there, and I've made it very clear from the beginning of the week that this was going to be a very volatile week. It was going to be very manipulated. It was going to be maybe very difficult for a lot of you, and even for myself at times. So far this week, it's been not the easiest. I think today was, at least the AM session I'll go over, it was the easiest so far this week for me. But it's very important on weeks like this that you have to journal them and say, okay, when there's a lot of volatility stepping into the market, it should not increase your risk. You should not increase expectations. You should not increase your confidence. A lot of this should go back to the point of reducing risk, reducing trade frequency, reducing expectations. All of these things are very important to keep in mind on weeks like this. And just in a general aspect, I mean, every single week there needs to be such a level of risk and respect to the authority of these markets that it is needed. And I think the live stream today, if you haven't already, I would recommend watching it. I made some really good points, probably for the first 30, 45 minutes. I went on a good little tangent, and I was happy with the delivery of it in terms of psychology and some just good overall advice. I'd recommend going over it. But today, we had, at least in the AM session, a news event driver that I wasn't intending on trading this morning because FOMC, with that being in the afternoon, typically that could hold price off in the AM, and that can make the AM session very manipulated, harder to trade. So it's the reason why I don't typically trade them. And this is where, if you listen to the voice mode note I made in the live market updates, I was explaining how at times you need to use discernment within your own trading to see if you're able to trade, not necessarily outside of your rules, but if there's something that's changing in the market, then you need to adapt. And for me, the relative equal highs and the daily sell side imbalance here were the two draws that I seemed the highest probability for me today. It seemed the easiest for me to look at it and say, price is going to go here. Because as soon as it got into the sell side imbalance, and if we got into that before FOMC, it was going to put me at a standpoint of, I don't know where price is going to go from there, because it can either drive up into this with FOMC, Fed rates, anything can happen, large spikes lower or higher. We're inside of the daily sell side imbalance, so that can give way to lower prices. And I felt very confident in the relative equal highs and the sell side imbalance being traded into. If I did not see price this morning willing to do so, willing to move into that before FOMC, I would not have traded it. And I'll go over the trade that I took. But this is where we use discernment, and we use the experience that we have and the skill set that we have to discern that. And that takes time. I'm not saying it comes overnight, but that's what we have to do. So we are looking at basically all week was the relative equal highs that were resting right here, and looking at the daily sell side imbalance for price to trade up into it. Now, as I was watching the AM session, there was a news event driver before the open, and I watched how that played out, and I was watching how price was trading up into the open, and we almost ran the highs here before the open. There was a setup before the open that I should have taken. I didn't. I was still very hesitant all morning before the open because of what was happening in the afternoon. I didn't know if we were going to get a clean price delivery, because it's pretty rare that price delivers like that before FOMC. It's pretty darn common that price usually stays stagnant, manipulated, consolidated before FOMC, because it likes to hold certain draws in liquidity, especially a very clean major one like we have, until that news event driver. And that's just where I had to use discernment and time and experience to say, okay, well, it's not willing to do that. So the better option for me is to better off trade up into that draw liquidity, get my trade in, and do that versus letting it run the liquidity and wait till FOMC to take a trade, because then I'm in a place where I don't really know where price wants to go, because it's really met my terminus. It's met my drawn liquidity. It's met the place that I think price should expand to. So hopefully it makes sense. If I could go back in time, and yesterday I would have live streamed this morning and I would have done that, but again, it's a very rare occurrence that those things happen. So yesterday we ran the sell side liquidity in here, and this is just, we pointed this out yesterday in the daily log, that this should just be accumulation, manipulation underneath the sell side liquidity, and distribution back to the highs. And that's using the daily time frame as a guide, as well as looking for the daily time frame sell side imbalance to be traded into, looking for these higher inefficiencies to be traded into, and the buy side liquidity. So when I was looking at this morning, that's the daily SIBI, the red line. I pointed out in the morning session before the open, like about 8:30-ish New York local central time, 8:20, 8:30 if you go back to live market chat. We were resting like right down here. And I was saying for the day that I was looking for the buy side liquidity to be traded into. And I actually don't think I had the higher inefficiency marked. I think I had this one marked up. I said those two seemed very probable, for at least for the day. I didn't know beyond that what price was really trying to do. So as we go down on these lower time frames, that's where I really started to get the clue, like, hey, this thing probably wants to draw up into it. So you can see overnight, Asian session last night, it was really driving higher. I mean, from the open of yesterday, it just immediately started to expand higher. And this is where utilizing clues and time and seeing, well, it's really, really trying to gravitate towards these highs in here. And I'm looking at the time, I'm looking at the clock, I'm looking at the day, I'm saying it's probably going to take it out before the open or at the open. So if I'm going to do something today, it's got to be in the AM session, because that's the best probability for me. I don't want to wait till the PM session and not know where it wants to go, not have a high probability draw on liquidity. So this goes back to the point of discernment. And this was the news event driver this morning at 8:30. So you can see it's really trying to reach towards basically 19,390. This is the news event driver. We work off of this inefficiency in here. And this is where I should have taken a trade. And I was very hesitant, because it's very uncommon that price usually moves like this before FOMC. So even me, I was really hesitating this morning, but in hindsight, I even saw it in real time. I just didn't take it. And that's due to me pretty consistently following the rule of not trading before FOMC. But in here, this is the news event driver. We drop down into this inefficiency. I'm not saying I'd be taking this trade, but as soon as we expand away from here, there's a small little inefficiency that was resting right in here, right there inside of a discount. So this inefficiency right there, and ES was pulling above its highs. So that was another point that I was observing, is ES was really trying to gravitate higher, which was pulling this as the six sister higher. So from this dealing range low to high here, it's dropping down into that discount. That's where I should have been taking the trade. That's where probably the best option would have been. And right basically at the open, it hit the high, but that's pretty relatively equal. And to me, I thought there was a lot more work that could be done during the day. So there was this inefficiency in here, which, yes, we closed a little bit underneath it, but the parent time frame would be the 5-minute. And this is right at the open. This inefficiency plus this down close candle right here is your bullish order block, which if you go back out to your 1-minute time frame, you're going to see the dealing range pretty clear, which would have been from this dealing range low up to that high there, dropping down into optimal trade entry. So what I'm observing is, well, if we're dropping down into this discount, into that bullish order block, into that inefficiency, I want to start seeing, does it have willingness to start moving higher? And can we run out 13 or 19,390 and really get a clear run above it? After we did that, I didn't know what price was trying to do. I didn't know if we're going to continue higher, if price was going to stay stagnant. I didn't know. So even on the 1-minute, you can see there's starting to be a change in state delivery. It's a bullish market structure overall. All price is doing is dropping down into a discount, taking out internal sell side liquidity, taking out internal sell side liquidity. That's basically model number 2 is you're taking out internal sell side liquidity, dropping into a higher time frame, parent time frame discount into a parent discount PD array, bullish order block here. And this is where I was even observing a 15-second. I was able to utilize it today because I wasn't seeing what the entry I really wanted. I was very, very confident on this drawn liquidity. It was too easy for me to see. And we called that all week. So again, price drops into that. I'm observing on a 15-second time frame. I should have taken my first entry here, or not my first entry, my overall entry. I should have taken it in here. That's where I should have taken it, because you're shifting above down close candles. That's your change of state and delivery there. And it's dropping down to this inefficiency with an inversion. That right there is a bread and butter, because you have the backbone of this dropping down into its discounted inefficiency or PD array, whatever, bullish order block breaker. It's moving away from it. So that should be your idea that, okay, well, that's the low. It should not go beneath that low because it's already reached into its discount. Even here, it's not reaching into any discount or anything. It's not creating any efficiency, so you wouldn't be buying there. Right there, that's a beautiful entry. Dips down into it again and expands away from that area. Even this down close candle, that would be your bullish order block, mean threshold of it. Moves away from it, gets above this small imbalance to the left of me. So that's showing me, okay, well, now it's really starting to gravitate higher, and it left this inefficiency in here. So this is where I'm taking my entry, is inside of here, because it's really showing me the willingness to move right to my drawn liquidity. And that's what's giving me the overall confidence. It's saying, well, it's not willing to not draw into this liquidity before FOMC. It's willing to do it. So I might as well execute now and be confident with the entry and be confident with everything, then wait till FOMC. So the risk reward looked like this underneath the third candle, 14 handles. I think I drew it a little bit above the highs in here. It was about 40 something handles. And I was very content with that. That was a perfect execution. I was very happy with the overall trade, and eventually we drew off lower. But as soon as we reached into 19,390, that's all I really wanted out of it. I didn't want any more. I didn't want to keep going with it, knowing FOMC and everything else was ahead of me. So that was the trade for me today. Overall, if I could go back in hindsight, I would have taken this trade down here and probably drew it up into 19,390 and probably would have pulled off partials or been done before the open. But after that, that's where I was done. You can even see the AM session was a bit sloppy overall, and that's due to FOMC and the Fed speaking. So, or Fed rate speaking, whatever the rate cut. So in the PM session with FOMC and everything else, I didn't know what it was really trying to do. And in terms of my rules and things that I have in place, it was a bit weird today because Fed rate was placed at 1400. Then the release of FOMC was at 1430, and the protocol for trading FOMC is waiting for 30 minutes after FOMC, which would put me at the 1500 hour clock. So I knew that the PM session was going to be really weird, and that's the reason why I elected to trade that drawn liquidity, because I knew if it was going to do it, I might as well trade it now and avoid all of this stuff in here. And even ICT was on board with the whole idea. He was within the Telegram, at least in the morning session after. He said, this is what I did. And I was happy that everything I did was in agreement with them, because I didn't see waiting for FOMC the viable option. Now, again, if that drawn liquidity was not met and it was way down here, way beneath it, and it was stagnating, it wasn't doing a whole lot, and I could see that, then I wouldn't have traded anything until this PM session. I wouldn't have traded anything, and I would have kept on with the same idea for AM. I would have just transferred it over to the PM. But obviously, with discernment, you could see that. So if you want to see some things as far as the PM session, all the annotations in there, you can go over it. It wasn't super clear to me. I couldn't find anything that was super clear to me as far as what price was trying to seek. So I had really just a mediocre time. I was really more or less focused on psychology and stuff, because again, once my terminus is met, that's something that realistically and with logic, not emotion, that you can see with logic clearly that, okay, well, price should draw into this, and after that, that's where I kind of have to stay neutral, because either I'm pushing beyond that and I'm being overconfident, overzealous in a certain idea, and that's the emotions, and that's where I don't like to play. I want to play an idea that says, okay, well, within time, reason, and the daily profile, it should be logically, willingly trade into a certain objective. And once we get into that, I don't know how far, beyond that. It could trade it, it can do it, and you saw it today. It went beyond that, but I don't know for a fact it's going to do that. So hopefully, it was a good little recap of today. We have NFP on Friday, so tomorrow's going to be a little bit weird as well. We'll see how everything plays out. I don't really know where price is going to be willing to expand to tomorrow. I have an idea for the rest of the week. We may want to revisit this liquidity void up here. We'll see with what happens tomorrow. So that's going to be it for tonight's daily log. And until tomorrow, good luck and good trading, everybody. Be safe.